Hello, my name is Madalyn Sanderson, and today I'll be presenting my financial statement analysis of Chipotle Mexican Grill. In this presentation, I will analyze Chipotle's financial performance using key financial statements, ratios, and trends, and then provide strategic recommendations for future growth. First, I'll provide a brief overview of Chipotle and the purpose of this analysis. Next, I will review the company's major financial statements, including the income statement, balance sheet, and cash flow statement. Then, I will evaluate key financial ratios and financial trends. Finally, I will highlight the company's strengths, areas for improvement, and conclude with strategic recommendations. Chipotle's Mexican Grill is a fast casual restaurant chain specializing in Mexican-inspired food made with fresh ingredients. The company was founded in 1993 and has grown into one of the largest fast casual brands in the world. Chipotle is known for its customizable meals, simple menu, and focus on high-quality ingredients. Today, the company operates more than 3,000 locations worldwide and continues to expand both domestically and internationally. The purpose of this financial statement analysis is to evaluate the financial health and performance of the company. This includes identifying trends in revenue, profitability, and expenses. It also involves assessing important financial metrics such as liquidity, efficiency, and financial risk. Based on this analysis, strategic recommendations can be developed to support the company's long-term growth and financial stability. Income statement measures a company's profitability over a specific period. From 2023 to 2024, Chipotle experienced strong financial growth. Revenue increased from $9.87 billion to $11.3 billion, representing approximately 14.6% growth. Operating income also increased to $1.92 billion, reflecting stronger operational performance. Net income rose to $1.53 billion, showing improved profitability. However, operating expenses also increased during this period, reflecting higher food, labor, and operational costs as the company continues to expand. The balance sheet provides insight to a company's financial position by showing its assets, liabilities, and equity. Chipotle's total assets increased from $8.04 billion in 2023 to $9.2 billion in 2024, demonstrating continued business growth. Leasehold improvements and property also increased, indicating investments in new restaurant locations and infrastructures. Operating lease assets increased as well, reflecting long-term restaurant leases. Although liabilities increased slightly, they remain manageable, reflective to the company's total assets. The cash flow statement shows how cash moves through the business. Chipotle generated $2 billion in operating cash flow, which increased from the previous year. This indicates the company is generating strong cash from its core business operations. Investing cash flows reflects how spending on new restaurant development and infrastructure. Financial cash flow includes share repurchases and capital allocation decisions. Overall, positive operating cash flow supports the company's long-term growth and expansion. From a shareholder perspective, Chipotle also demonstrated strong performance. Basic earnings per share increased from 89 cents to $1.12, reflecting high profitability for investors. The company also eliminated treasury stocks, indicating that previously repurchased shares were retired. This reduces the number of shares outstanding and increases earnings per share. Overall, these actions demonstrate management's focus on returning value to shareholders. There are several key financial ratios provided additional insight into Chipotle's financial performance. The company's debt ratio is 46%, indicating a moderate level of debt that is not considered high risk. Chipotle also demonstrates strong liquidity with a current ratio of 1.52, meaning they can comfortably meet short-term obligations and turn their assets into cash quickly. The asset turnover rate of 1.23 shows the company is using its assets effectively to generate revenue. Finally, the return on assets of 17% indicates the company is generating strong returns from its investments and resources. Several important financial trends can be identified from this analysis. First, revenue increased by 14.6%, indicating strong customer demand and continued expansion. Second, net income increased to $1.53 billion, demonstrating improved profitability. Liabilities increased slightly as the company continues financing expansion, but they remain manageable. Total assets also increased to $1.16 billion, reflecting additional investments in operations and infrastructure. Finally, the company maintained solid operational efficiency supported by an asset turnover ratio of 1.23. Overall, Chipotle demonstrates several key financial strengths. First, the company shows strong revenue growth, with revenue increasing by $1.44 billion from 2023 to 2024. Second, the company maintains healthy profit margins, with net income increasing by $305 million during the same period. Finally, Chipotle has strong liquidity, with a current ratio of 1.52, allowing the company to comfortably meet short-term financial obligations. Despite these strengths, there are also areas for improvement. First, operating costs continue to rise as the company expands. Operating expenses increased by approximately $1.26 billion, which could place pressure on profit margins if not managed effectively. Second, Chipotle relies heavily on a single revenue stream, which is food and beverage sales. This is limited diversification could increase financial risk if customer demand changes. Diversifying revenue streams could help strengthen long-term financial stability. To address these opportunities, several strategic recommendations can be considered. First, Chipotle could expand into retail sauces and packaged foods products. Selling branded salsas, marinades, and ready-to-eat meals in grocery stores would diversify revenue and extend the brand beyond restaurants. Second, the company could introduce a Chipotle at-home meal kit subscription, allowing customers to recreate menu items at home while creating an additional revenue stream. Third, Chipotle could implement smart vending machines in locations such as airports, college campuses, and stadiums, expanding access without the cost of a full-on restaurant. Finally, Chipotle could host limited time night market events in major cities to generate brand engagement and attract new customers. In conclusion, Chipotle demonstrates strong revenue growth, profitability, and liquidity. Financial trends indicate continued expansion and strong operational performance. However, addressing the rising costs and diversifying revenue streams will be important for long-term success. Among the recommendations presented, retail product expansion provides the strongest opportunity for future growth by allowing Chipotle to reach customers beyond traditional restaurant locations. Thank you for your time and attention.